everyone. Welcome to the Bose Wealth Management podcast. We've got a very interesting one today about U.S. persons returning to Canada or Canadians who've lived in the States, maybe for work, and have decided to come back to Canada, maybe for retirement, maybe for whatever reason, relationships, or they just felt like moving back. But there's a lot of financial and tax issues involved in that. We previously did a Departing from Canada podcast. Now this is about people returning to Canada or if you're immigrating to Canada. So you need help with that. Today we've got Kelly Strachan. She's a cross-border tax specialist based in Boca Raton, Florida. Kelly's a principal at Abito CPAs and Advisors, and she deals with nothing but cross-border tax planning for Canadians and Americans. We work together some time. Kelly, thanks for joining us today.
Thank you for having me.
How are you doing down there? Is the nice and sunny in Florida today?
It's beautiful today. Can't complain.
Yeah. Do you spend the entire summer there? Do you get away for the summer?
I do. I travel a little bit, but usually goes down south to the Bahamas.
Oh, so you don't go north to the mountains?
I don't. I just keep going hotter.
Keep going hotter. All right. All right. Nice. So briefly, I've got a slide here. I just wanted to let people know our main mission here is not selling investments, as we provide clients with peace of mind. We help them plan and secure their financial well-being. So that's our goal. And I'm registered in both countries, so I deal with a lot of cross-border planning issues. And Kelly and I have worked together for quite a number of years. So welcome back. You're coming back to Canada. I've got a number of clients. I deal with quite a few in the entertainment sector. So they may go down, decide, I'm going to be an American, I'm going to live there. And then 15 years later, they start missing family, or they want to come back for healthcare, or they just, miss the cold weather. Because some of them are the opposite. They want to get out of the heat. So for whatever reason, they're coming back to Canada. And we tell people, plan. Really, ideally plan 2 years ahead, but at least 1 year ahead, so we can help people manage their affairs accordingly so they don't lose money in taxes and don't have unnecessary filing requirements, and that they don't violate any immigration issues they might have. So coming to Canada, Kelly, have just some general issues for people to think of in a broad sense?
When they're returning to Canada, they just want to kind of plan it out to ensure they are minimizing their tax in both countries. We don't have the same deemed disposition that a Canadian departing Canada would have, unless, of course, they're renouncing U.S. citizenship or they have had a green card and filed as a U.S. resident for 8 years or more. So other than that, most people, if they're here on a TN visa or a different visa that's not an immigrant visa, they can move back without a deemed disposition of their U.S. worldwide assets.
Okay. But it's a little more complicated than just going across the border and coming home.
It is. It depends on what their investments are here. Not everybody is duly licensed like yourself. So if they have investments in the United States, they need to ensure that they've reached out to you to ensure that you're managing them and they can still maintain those investments. They will need a duly licensed investor to be able to maintain some of their investments here.
Right. Yeah, we see that a lot. So we're able to hold, and we can also hold IRA type accounts, which is a big thing. So people don't have to cash out the IRAs that they built up in the US, which for Canadians is similar to a Canadian RSP. And a number of other accounts. They may have 401k accounts with an employer. Those are the biggest issues we see. But of course, there's also immigration and tax issues to worry about. Probably getting ahead of myself, but in terms of a green card, if they keep the green card when they return to Canada, what does that mean?
If they maintain their green card, even if they just put it in a drawer and say, I'm no longer going to file as a U.S. resident, that does not mean they have given up their green card. They are still going to be subject to U.S. tax as long as they still have that green card. Or even if they've lost that green card, they need to officially renounce that green card. They need to file the form I-407 to ensure that they are relinquishing that green card.
Okay. And if so, they file a form, say they do it on June 1st.
Mm-hmm.
Do they need to get an acknowledgement back, or the fact that they filed it is enough? Or
Their immigration attorney would be able to help them with that. But once they filed it, then they're no longer a US tax resident. So they would have maybe a part year resident return to do
Right.
for the year they have left the United States or relinquish their green card. And then after that, they'll be considered a non-resident and won't be subject to the worldwide reporting in the United States that a person has a green card is required to file as.
Okay. So this is pretty important for people because I can see people thinking, well, I'll keep the green card. I don't want to give it up. It was hard to get. I'll just keep it for a while. But basically, that means they're subject to worldwide income tax.
Correct. They still need to file a US tax return and report worldwide income. There
Right.
are some treaty claims we can make based on a person's situation, but just moving back to another country with the green card and not officially relinquishing it does not get them out of the US tax system.
Right. Okay. In general, though, it's easier to return to Canada, I guess, than to go to the US to begin with.
In general, yes, it is easier to go back to Canada than depart to Canada and come to the US.
Right. Now, in terms of the investments, let's say they have incurred some capital gains in their non-registered accounts. Is it the same as when you leave Canada? Like if you leave Canada, you trigger a capital gain, whether you sell the investments or not. Is it the same or similar coming back?
If they are, assuming they're not a green card holder or not a US citizen, then they're not going to have a deemed disposition like they did when they departed Canada. They will only report their income for the portion of the year that they were resident, the worldwide income. And then after that, they only have to report the US sourced income. So if they have US securities, for example, they will have a withholding tax on any dividend payouts once they become a non-resident, but it won't make them have to file an income tax return if the correct withholding tax was done.
Okay, so I'm trying to think. So we've got people that become US citizens. We've got people with green cards. Then we've also got people on visas that are just down working, correct?
Correct, exactly.
Okay, so is it more favorable for a person on a visa than a green card holder in terms of that capital gains issue, or?
Well, it's just a different type of filing. With the, say, for example, a TN visa, if they came down here on the TN visa, once they move back to Canada, they don't have to do a similar deemed disposition when they've given up their green card. So they would still have to report for the period of year that they were a resident, but a green card holder or a US citizen will continue to report worldwide income even after moving back to Canada.
Right.
So that's the
Right.
difference with those two.
Okay. All right. Like I say, it's pretty complicated and my head's already starting to spin. I work with this pretty much every day. IRAs and with 401ks, as we said, so an individual can keep their IRA there if they choose and draw it out in retirement.
Correct.
Unfortunately, there's no direct transfer. People always ask, well, why can't I just transfer it to my RSP? And it would be very nice. I mean, politicians could sit in a room for 25 minutes and I'm sure they have plans. They would think that's such a great idea. Let's just do that. But that's not on the radar right now. And that probably won't happen in my lifetime. So there is no direct transfer, unfortunately. There can be other strategies, which we won't get into today. If you have huge RSP room, you could potentially withdraw it. And depending on your unique situation, you may not pay significant tax in the US. And then you won't pay tax in Canada because you've got the RSP contribution room. But that's a very complex issue. But the good news is you can just keep it where it is. And working with people like at Raymond James, I'm registered in both countries. We can hold IRA and RSP type of accounts. And Social Security. So before on another call, we talked about Canadians with CPP and old age security. If you've worked in the US for 15 years and you've built up some Social Security, can they still collect that if they move back to Canada?
They can collect in both countries. The Social Security will be taxed in their country of residence. So if a person is now moved back to Canada and is receiving US Social Security, it will only be taxed in Canada up to the maximum 85%, similar to how it would be if they were in the United States.
Okay. Would the US take a withholding off before they sent them the money?
No, there's no withholding on it. We just won't tax it at all, and it'll only be on the Canadian tax return.
Okay. And I'm just trying to think of the mechanics. So if a person has a Canadian address, is that enough, or do they require other paperwork to say you're a Canadian resident?
They just need to let the Social Security Administration know, but there's nothing else they need to do. It just needs to be ensured that it's reported on their Canadian tax return when they file their annual return.
Okay, well, I'm sure that's good news for some people to know that they're not just leaving money behind.
Mhm.
All right, and one of the favorite ones for everyone. You've moved to California. You bought a house 15 years ago. It's gone up in value from 500 to 700,000. And you sell it the day before you return to Canada. What are we looking at there? Is that tax free?
It's not necessarily tax-free. There are some tax benefits they could get if it qualifies for principal residence exclusion. It's not as good as a Canadian principal residence exclusion. It goes up to $250,000 for a single person or $500,000 for a married filing joint.
Okay.
And they have to meet certain requirements, such as it's been their principal residence for 2 of the last 5 years. If they don't meet that, they may still be able to exclude a portion depending on the particular situation. But they would report it on their US tax return if they didn't qualify for that full exemption.
Okay. So an example, 500 to 700, and they've lived there for 10 years. They probably okay, not paying any tax on it, but if it's gone from 500 to a million, they potentially, well, unless they're married, then you've got the two people, so that would make it free. But if you're single, 250,000 exemption, the other 250 would be subject to US tax then.
Correct, exactly.
Basically. Let's say they decide to keep the house and rent it out in the US. They've come back to Canada, so then they're going to be a Canadian resident. Do they just, so in the US, they just pay US tax on that property?
Correct. So if they have a US property and they're no longer resident or a green card holder or a citizen of the United States, they would still have to file a non-resident tax return because they are generating income from the United States. So they have two options. One, remit 30% of the gross rents to the IRS and no longer need to file a federal tax return. Most people choose not to do that because 30% of the gross rents received is kind of high. So they elect to file a tax return and pay tax on the net basis. They also need to report the rental activity in Canada. So a lot of people aren't aware that you have to still report worldwide income, and that would include the US real rental activity. And you'd be able to take a foreign tax credit in Canada, so you wouldn't be double taxed if you paid tax in the United States.
Right. So they would get a foreign tax credit again for the filing in the US for that income. Our Canadian tax is generally higher, depending on the state you're in the United States. So they probably will owe a little more tax, but they will get a foreign tax credit for the US amount. Correct. Okay. So my head's spinning again. That's a lot of stuff. So again, planning. So I encourage people to reach out to us. I don't charge people for initial consultation just to see if they have general issues. Sometimes people just hear something in the New York Times or on CNN. They just want to say, oh, what happens to me if I'm going to move back to Canada in 4 years? I'm happy to talk to people and plan ahead. And Kelly works at Abitos. It's Kelly at Abitos, ABITOS.com. Phone number is 561-325-6506. Please feel free to reach out to us. And thanks for joining us, Kelly. Have a great day. Thanks so much. I'll talk to you soon.
All right. Thank you.